Hello, beautiful entrepreneurs. Welcome to another episode of Your Business Unleashed podcast. Today, we're going to be talking about the 2024 federal budget highlights. This is a series of 4 or 5 podcasts. This one is going to be the summary. So I'm just going to run through all the major changes in the 2024 federal budget, which came out on April 16th. Sorry, I didn't have a chance to get this out to you sooner. I've had a very busy couple of months, not only with new clients, but also dealing with the aftermath of a lot of ill-conceived government policies, such as the UHT and the new trust rules, and just a lot of changes in 2023, 2024. So this is the summary for the 2024 federal budget. On April 16th, Chrystia Freeland announced that the 2024 budget is projected to run another whopping $40 billion deficit. I'm not sure if you've been paying attention here, but the price of everything seems to be a bit more expensive. And the reason we've been doing that is because Canada has been going into debt, astronomical debt. Maybe, there's some good arguments out there from economists who know what they're talking about that maybe we're in a better position than certain countries. But my counter argument to that is we don't need to be in this position. We don't need to crater our key industries, such as the energy industry. We could be selling a lot more things to the rest of the world, which could be helping out with, and we could be spending a lot less on stupid things like ArriveCan apps and stuff like that. So I'm a little bit hot on these $40 billion deficits, and I'm sorry about that. So the spin doctors I'm not sorry about that. What am I talking about? But I will try and tone it down for the rest of the podcast. How's that? So the spin doctors in the Liberal government's marketing team have come up with some catchy words to help us choke down another year of economic devastation, such as to build more homes faster and to help make life cost less and to grow the economy in a way that helps every generation get ahead. What complete crap. They have created all these problems that we are currently having financially as a country right now. They are causing immigrants who have just arrived here, who have really good knowledge. I've seen a lot of reports of people who are going, you know what, I can't do Canada, I'm out of here. And this is like right on the heels of just getting here, ready to offer up their supreme knowledge of really great things and industries that we need here. And people are leaving. We've got record immigration from the last 10 years. We're setting records on the amount of people leaving Canada. And so this is not good. But anyways, so let's go through the changes. The big ones are the capital gains inclusion rate increase. So let's talk about personal tax changes first. Okay, this is obviously going to be centered mostly around tax. So the capital gains inclusion rate increase for individuals, it's going to go from 50 to 70% or 67% on capital gains in excess of $250,000 per year, right? And this change is set to take effect on June 25th, 2024. So that's in 3 weeks from the recording of this. I've also recorded another podcast. It's got a fairly detailed breakdown of that announcement. And so go and listen to that one. The lifetime capital gains exemption is going to increase from its current $1.016 million to $1.25 million, again in 3 weeks, June 25th. So if you're planning a sale of a company, get in touch with us and we'll help make sure that you're set up to take advantage of that. And I've also recorded another podcast on that as well. The Canadian Entrepreneurs Incentive is a new, highly limited exemption that will be available for some Canadian entrepreneurs to reduce their capital gains inclusion rate on the sale of qualified businesses after they've used their lifetime capital gains exemption and after they've used their $250,000 inclusion rate reduction to 50%, they can claim at a third, so 33% for the next $2 million. I've also recorded another blog on that. And the alternative minimum tax, which is a parallel calculation that runs beside an individual's regular federal tax calculation. It's meant to tax people who have a high level of income, but which that the alternative minimum tax deems to be a low level of tax calculated on the regular method. Call it a fairness tax, if you like. The government has proposed significant changes to AMT in 2023. And the tax community went nuts and went, look at all these negative impacts of yet another proposal that you've fumbled. And thank goodness the government came to the table and made some changes in 2024, which actually fix a lot of that stuff. Not totally, but it helps. And so alternative minimum tax is changing. It's very complicated. It's not for the lay person, but you can go and read up about it searching on the internet. So your home buyer's plan, we're going to defer the start of the 15-year repayment period temporarily for withdrawals between 2022 and 2025. And so this is where you take money out of your RSP to go buy a house. You're going to get and then you have to repay that into your RSP or have it included in your income over 15 years. The increased with RSP withdrawal limit is also going to go from $35,000 to $60,000. So big changes to the home buyers plan this year. So there's a temporary deferral and there's an increase to the limit. There's a list of, so for disability supports deduction, there's an expanded list of stuff that's going to be able to be claimed under that. And there's a variety of other little things, but I think those are the main ones that are going to impact most of our clients anyways. For corporate tax changes, that was personal. For corporate tax changes, the capital gains rate is going to increase from 50 to 67%, but unlike individuals, it's going to increase on the first dollar of capital gain earned, whereas individuals get a $250,000 exemption per year from these changes. And this is, again, taking effect in 3 short weeks. I've recorded another podcast on it. Go have a listen to that. Notably, we have no legislation, so we can guess at some advice for you, but we're not going to be able to provide you with solid advice until we get some legislation, even though the change is set to take effect in 3 weeks. The Canada carbon rebate for small businesses. Apparently, we're going to get some of our carbon tax back as small businesses. And so that's exciting because we've been waiting for it for whatever it is, several years now. But this does require you to have your December 31st, 2023 tax return filed by June 30th, 2024. So make sure you don't miss the filing deadline. Okay, and then there's accelerated capital cost allowance, CCA, for purpose-built rental housing. Normally you get 4%, but they're going to bump it up to 10% for eligible purpose-built rental projects. I think this is meant to spur the housing industry and get some inventory on the market, and you have to have started projects before January 1st, 2031, and it has to be move-in ready by January 1st, 2036. So that's good. We've only got 12 more years to wait for some good housing here, but interesting. But if you have construction started by the budget date or after the budget date and before 2031, and it's move-in ready in the next couple of years. So this is a 12-year program, basically. Productivity enhancing assets. So the budget proposes immediate expensing for property additions after April 16th, 2024 and before January 1st, 2027 that are available for use before 2028 for patent and right to use patent information, Class 44, Class 46 data infrastructure equipment and related system software, and Class 50 general purpose data processing equipment and software, think computers and servers. Okay, so interest deductibility limits for purpose-built rental housing. The EIFEL rules will be expanded to include an exemption for certain purpose-built rental projects. And then if you have an information request and you're non-compliant with the CRA's information request, the CRA is getting a lot more power here, including standard non-compliance notices. Like if they give you a non-compliance notice, they can stop the reassessment clock, and they've got various other measures coming in. So just CRA is about to get a bit more scary here. Crypto asset reporting framework. So there's some changes to that. So if you're in crypto, you want to go read about that. And then there's a clean energy investment tax credit as well, which that doesn't affect a ton of our clients, but if you want to go read about that. So those are the key highlights from the budget. If you have any questions, please feel free to reach out. And also the government's, be careful when you're reading the government documents online. They tend to put a lot of spin on it. So, they are written in plain English, but they are written with from a spin doctor's perspective that has a lot of distruths in it. So I'd encourage you actually to go and read some analysis from reputable people other than the government on the announcements, because it's hard to trust what this government has been saying in terms of the impacts of their announcements, because it's just simply false most of the time. So, all right. So thank you so much, and we will see you at the next episode.